Morning everyone, it's Chris here from Serene Education with the 4 majors analysis update for the 13th of June 2012. Hi guys, just going to be going with majors this morning, starting with Euro against US dollar on our daily chart. Let's have a look and see what happened yesterday. Quite a tentative trading day yesterday, not much given away by the markets. Word out that people are a bit unsure as to what to make of the 100 billion euro loan that was given to Spain this weekend, or past this weekend. So not a hell of a lot of movement. We did see some downside movement on the Monday. However, that bearish engulfing candle here that really outstripped these 2 days of indecision. Prior to that, we didn't see that follow through as I thought we might have towards the latter or to the downside. However, we just saw it pretty much just finding a bit of support here. That support, however, that little consolidation, however, is under the 23.6% retracement of this down move that we've seen since early May. All this negativity to the downside, and this little correction here at 12,300 has seen price moving to the upside. However, bounce wise, not really moving with a lot of momentum, testing 38.2, but you can see consolidating quite a lot around the 23.6%. Yesterday's range not breaking that 23.6 at all. In fact, just sitting quite tentatively underneath it. Quite a small trading range, very indecisive is the actual key word. Yeah, if this is to remain a definite corrective bounce to the upside for the foreseeable future, then we do need to see 23.6 being breached with a nice bullish engulfing, and in doing so, we could see price reverting to the upside target of 38.2, roughly around just short of the 12,700 mark, and those other levels to the upside 50% and the 61.8 could definitely be targets 3 and 4. So what we want to see today, if this is generally moving higher, is a break and close first of all this morning, if possible, above this 23.6. Here just below the 12,5,300 mark, if I'm not mistaken. So notice CTC on this, however, on the daily is telling us that still negative sentiment in this consolidative pullback. We do have, however, a blue arrow. However, the other 3 parts of the strategy are not available, i.e. blue candles and the CTC are also again blue. So therefore, we still look for that negative sentiment until such time as we get the blue. So as it stands now, there's more eggs in our basket for negativity, and as long as it's 23.6 acts as a resistance level, then there's likely to be that negativity to kick in later on. So got to see a break of this 23.6 to see that negativity starting to wear out and more of an upside favoritism. Until then, we're looking for that consolidation with the outlook of our target back down towards 12,300 being more realistic if we get a nice bearish engulfing here. Moving on to sterling, we know that 15,300 is a major support and resistance level. I only have to just show you the weekly chart to show you how significant the support level was in the past. I'm just going to make this nice and dark and black. There we go, so you guys can see it. Let me just go out to a weekly, and I'll just confirm that this 15,300 quite a strong one. You can see through September of last year, or 2010, apologies, through the first part of 2011, right through to October and January of this year, you can see a major support. So psychologically, anybody who's trading or shorting at the upside here would have looked at this long term as their overall target, and as we hit or breached this or moved into this area here, profit is starting to be taken off the table. Now we want to see how much profit taken off the table. The greater the pullback, the more confirmation this is going to be a genuine long term support bounce to the upside. You can see how much we've bounced previously at this level, a noticeable pullback, and a lot higher than some of these initial bounces. So if you look at the high that we saw in May, before we saw this massive sell-off to the downside, and we use this as a definite support area, you can see the 23.6 has been breached over the past week or so. Going into this new week, if I go back to the daily, you can see the 23.6 price is now broken ahead. Yesterday's candle bullish, engulfing all of this uncertainty here and moving higher. So now what I need to do is find support above 23.6, and we should be heading to our first target, 38.2, for the foreseeable future, and up to the 50% line, which will take us back to the institution. So as it stands now, we're starting to see that bullish upside movement. 23.6 has been breached. Got to find support here, and then we'll start targeting intraday towards our 38.2. get those indicators working to see if there's any upside favoritism towards the 38.2 at 1566 as our next target. So look for prices to remain above this 23.6, above the 1550 100 mark, and if doing so, then we should be targeting the 38.2 at 1566 for the foreseeable future. On to Swiss franc. Let's have a look. Onto the Swiss franc. Okay, price has just recently broken and and we've seen the 960 an all-time high for this pair. It broke this area of resistance recently. However, we've seen a pullback since then, and that pullback seems to be playing tic-tac-toe with the 960 mark now, that prior breakout area. Hesitation, which coincided with the prior high that we saw back here in early Jan of this year, and then we had a nice break to the upside. Then we had this indecision here, almost like a shooting star, an evening star pattern, apologies, and then we saw price reverting to the downside. We saw a little hesitation here, and we thought, well, the next candle, ideally we'd like to see this bearish candle. Ideally we'd like to see a nice bullish engulfing there, confirming that was a clear bounce on prior resistance becoming a new support, and then we should have targeted the upside. You can see clearly if that trend line was in play, then yes, we should have seen something happening. However, the sentiment really dragged price right through it, in doing so, in very negative candle to the downside. We had a consolidation, price pulled to the upside, and found resistance yet again. So we thought, well, price support would have been a new resistance. See price failing here, and then we should have seen a continuation lower. That was the case. However, during the latter part of the US session, price rallied and took out all that negative sentiment. Remember, the open is always going to be on your right hand side, and the open's on your left hand side and the close on your right hand side. You can see we opened way down here. However, we closed strong on that day, taking us back above the 960. So what we're doing is we're playing a bit of tic-tac-toe with this area here. We do want to see a genuine break away from this line as soon as possible, either upside favoritism or downside favoritism. It just needs to give us a signal. Here, if it had closed lower, then we could have looked for those potential lows to the downside. We could have targeted areas to the downside. 23.6 here, smack bang with that 960, the 38.2. Look at that, really selling into the 38.2, then bouncing higher during the US session. So as it stands now, the longer it maintains above 960, then overall we should be targeting the high previously at 977, or if it gets back below the 960 mark, bearish engulfing, then we should be targeting 38.2 as our first target, followed by the 50 and the 61 respectively to the downside. So for any movement for the US dollar, Swiss franc, maintain these highs above the 23.6 at 960 here, 959, 960. Should target the top end at here, 977. A break below that, bearish engulfing would look for us to test towards the 38.2. So as it stands now, 960 previous support and resistance, which happens to coincide with prior support and resistance back in January of this year, which coincides with that 23.6 quite clearly there. Okay, longer maintains above 23.6, the more likely it's going to reattempt those highs. Get below that, we should be tempting the first target, 38.2 here at 950 for the foreseeable future. US dollar Japanese yen pair, here again, all-time low here in February. We took this all the way up here to the 8400, which happened to be major support and resistance, and then we saw price falling over. And in doing so, we saw price tackling these February tracement areas here at 23.6. Nice little hesitation here at 23.6. Break through that, headed towards 38. Spent a time playing tic-tac-toe with 38.2, then heading down towards the 80. 80, which happened to be the 50% line. Very strong prior breakout. Okay, this is where price rallied above a major support and resistance level here, the mid-February mark, and that breakout really coming strongly, and we saw price really heading up towards a 261 Fib extension, MAF extension, and then we saw that 8400 coming into play. However, in the pullback, we wanted price to at least find support here and then bounce favorites to the upside, because it's made all this effort of actually breaking higher recently here in February. However, that didn't maintain that outlook, and price went into quite variously into this 80 market support, and then started going this side, that side, just playing, as I mentioned, tic-tac-toe with it. However, the CTC confirming that sentiment was still negative and dragging price low. In doing so, we saw lower swings going into that, And then we had this bearish engulfing pattern here that really cancelled out all this indecision here, because it was very indecisive, going yes, should I, shouldn't I, should I, should I. That bang told us it was a clear indication picture that we should have been looking for further downside movement, and we should have looked for targets to the downside, pretty much being 78.6 is our first target. And sure enough, we got that 61.8, the pullback, and then all the way down to 78.6, and then we saw the bounce to the upside. Doing so, we've gone back into this consolidative range on the underside of 80. Now, notice the CTC is still very much negative, and as long as we maintain below 80, the more likelihood is we're still going to see another break to the downside. It's imperative that if this is to be a genuine bounce up to the upside, then we need to see 80 being cleared quite soon. The quicker we see 80 being breached to the upside would confirm that we should be seeing positive sentiment for the foreseeable future, and in doing so, breaking above 50, we should be targeting the next level, which would be 38.2 here at the 8100 price support and resistance. Failing to do so and finding more resistance here at 80 would confirm that overall the sentiment is still negative long term, and we should be looking for these downsides at 61.8 being our first target, with the 78.6 as our second target. So as long as it maintains below 80, there's more likelihood for that bearish sentiment to still keep price in favor of downside. The quicker it gets above 80, the more likely we're going to see a bounce higher, and in doing so we should be targeting these two areas at the top side. It's that simple. Okay guys, that's it for today. Hope you have a fantastic trading day. Please be aware there is a lot of news today. Not so much out for the UK market. Well, there is a bit. We've got industrial production month-on-month figures for Europe at 10 a.m. GMT this morning. We have at 8:15 this morning we have the PPR month-on-month figures for Swiss franc. They're expecting an unchanged forecast there of negative 0.1. If it comes up worse than that, then you're going to see things happening. Europe industrial production month-on-month figures, that could be quite interesting. They are expecting contraction. That's inevitable. Everything's contracting at the moment now, so those production figures would obviously be getting less production. So the previous figure was negative 0.03. They're expecting a forecast worse off at negative 0.9. If it comes even worse than that, then we could see the euro being dragged down. Otherwise, we have European German 10-year bond auctions today. T-bonds, 10-year bonds, German. They are the mites of Europe, and it'll be interesting to see how their 10-year bonds auction goes. If it comes out a lot better than they predicted, the previous figure, then we could see potentially Europe doing well. So it would be a good sign for the European market. However, if those 10-year bonds come out less than they forecasted they would be, then there could be a very negative sentiment for the overall look, sentiment for Europe. Otherwise, we're going to the US market with a lot of data coming out today, guys. A hell of a lot. We have core retail sales figures, PPR month-on-month figures, retail sales month-on-month. There's a lot of PPR sales figures out today, and then we also have the 10-year bond auction for the US market. It could also be interesting. And then later this evening we have the New Zealand dollar official cash rate, the interest rates announcements, 2.50 or 2.5%. It has been 2.5% for a while. It'll be interesting to see if they follow their Australian counterparts and they actually drop the interest rates. The Australian government has dropped the interest from 4.50 to 3.50 if I'm not mistaken. And it'll be interesting to see what the New Zealand government does. So it'll be very, very interesting. So there's a lot of news for the US in particular, but we also have some very, very, very strong news or interesting news for the European market later this morning. So be aware of it. See where price is trading relative to it. Rather wait for those announcements to come out to see if they actually genuinely give us a corrective sentiment move for those pairs. Until then, keep it simple. Manage your profits. Manage your risk. And keep it simple, as I say. I can't keep mentioning it all the time. It's so important. A lot of people try and overcomplicate their trading. Look at support and resistance, major support and resistance. Look at where price is trading in conjunction with that. What is a candlestick telling you guys? You'll be very, very surprised how much sentiment you can actually read into candlesticks these days around major support and resistance levels. Yeah, very, very important. And then, those of you, the lucky few of you that have actually come and spent time with us, plot this indicator on your charts. Give you an extra confirmation signal, guys. And back it up with sound money management. Very, very important. Sound money management is imperative these days. If you don't have it, then you're likely to fail. And then I'll see you first thing tomorrow morning. Have a great day. Until then, Trade serenely.